following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking music means it's time once again for the Option Block, your bi-weekly source of options, wit, wisdom, and on occasion hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And it's good to be back on the old All-Star panel. I enjoy vacation time, and it was nice sipping those Mai Tais by the old pool and recording from our satellite office down there in sunny Florida. But it's nice to be back in the old recording studio, and it's nice to be back on the old Option Block All-Star panel, even though you guys managed to pull off a few interesting shows in my absence. And joining me on the old All-Star panel today, first up, we have the man from Maine himself, a.k.a. Mr. Rock Lobster, one Andrew Giovinazzi of Option Pit fame. Mr. Giovinazzi, welcome back to the program, sir.
Thank you, Mr. Mark. I am relaxed and refreshed as well after being off for a week in a sunny location.
Where did you go?
I went to Cape Cod.
Ah, the Cape. That is the Florida for New Englanders. Okay.
Exactly.
Anyone who's not familiar with the dunes of Cape Cod, it is.
Yes, I threw my kids off the dunes at Cape Cod. They thought it was fantastic. You could throw them out into space and they just land in the sand. I think I did it about 100 times and threw my shoulder out. But they are much better for the wear than I am.
Cape Cod, land of the summer home for the New Englander. Everyone I knew growing up always had a cottage or they rented a place out on the old Cape for the summer. It was the thing to do. So glad to see that you are keeping up the effort there, Mr. Lobster.
I am. The lobster doesn't leave Maine, though, after about June 15th. I told that to Sebastian. I must stay in Maine for the summertime. I hate leaving.
It's just too beautiful? Or you can't stomach anywhere else?
No, it's too beautiful. You can't leave.
I
mean, it's crazy paradise.
That's when the lobsters are at their most succulent, and they just crawl out into your boat.
They jump out of the water, and they jump right onto your plate, pre-cooked.
With one of them holding a sprig of lemon in their hands, ready to mist themselves.
Their claws, they squeeze the lemon upon themselves as they're sitting there ready to be dined upon. It's quite a thing.
Those are some well-trained lobsters you have in Maine, sir. All right, and lobster nonsense aside, we are also joined on the old All-Star panel today by a newcomer holding down the OX hot seat. He is Sean Fitzgerald, a trading specialist over there on the desk at OX with John and Tim. Both John and Tim are on assignment this week in different parts of the U.S., so Sean is filling in for them. Sean, welcome to the program.
Mark, thanks for having me.
And Sean, since this is your first time on the program as well as your first time on the old Options Insider Radio Network, why don't you give our listeners a brief overview of your background and how you found your way to the trading desk at OX?
I've been in the industry for about 14 years, working on several trading desks at multiple firms. Started out at TD Waterhouse, which eventually became TD Ameritrade. Worked there for a few years, headed on over to Terra Nova Financial. Worked there for 9 years, which then became Lightspeed. And then I went trading the S&P Mini Futures on my own for about 2 years. And then after about 2 years doing that, I got a little insight on this company called Options Express and felt joining the trade desk would be a good idea. And it's been great here, servicing many clients from retail to institutional, placing any type of stocks, options, complex strategy option orders, futures, bonds, mutual funds. We pretty much do it all on the trading desk here at OX.
All right, thank you for that, Sean. And with our team mostly complete, we're missing a few members today, but we shall soldier on nonetheless. We're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss what was trading, what was catching our eye, what was moving the broad markets today. And it was an interesting day on the street today. It seemed like we were going to, at least in the early part of the session, we were going to follow in the footsteps of Friday, of course, the great bloodbath in the markets on Friday. And, of course, Andrew, it's always our luck to have the big market action on the days when we don't record, of course.
Well, you can't predict that. As soon as you can start predicting the show will only air on when there's big market days, I'll bet you the viewership goes up to like 1 million.
We get
maybe 3
yes,
million.
that would be a good trick if we can pull that off. Of course, we get the days when the S&P is literally at 0.0% unched on the day. So make of that what you will, I suppose. But yes, Friday was, of course, the great bloodbath. Today it started off, looked like it might be heading that same way again. The S&P was down 10 or so handles during the early part of the session. Dow was down, I think, 60 or 70 as well. It was looking like it was starting to inch toward that direction, and then towards the latter half of the session, the market took a bit of a breather and turned around again and closed the day, as I said, literally unched. The S&P closed up 0.0% unched on the day. You don't see that very often. Often it's 0.1 or 0.02 or 0.2 or something like that, but you don't see 0% on the day very often. Dow pretty much unched as well. NASDAQ up 12 handles, or about 0.5%. And the VIX cash, which had been surging, looked like it might be rearing its ugly head towards the 30 handle today, now selling off towards the end of the day, down about 0.5 handle to 26.20 on the day. So a lot of interesting things to watch today, a lot of interesting things to catch our eyes. Andrew, I know you're back fresh from vacation. What caught your eye most in today's yo-yo seesaw action?
To be honest, yes, we're still waiting for the Greek elections. I'm sorry. Everybody can talk all they want, but I think, to be honest, everybody's just waiting for these Greeks and the Euro thing to be done. Either they kick them out or they keep them in. And we do follow the rhetoric, and I think the market it's very thin, so just needs a knife edge to get, any little spook, it goes down. And, and I think the long-term effects of, 3 years of $800 billion a year of fiscal stimulus. They're running it. They can't hire people anymore. The government can't. So now they're looking around for the private sector to start hiring people, and they're all freaked out because of all the stuff that's going on. So I think there's a kind of a confluence of things, which probably isn't great for equity short term. And I don't think we really get any clarity till after June 17th. I mean, one way or the other. So. And we sit here and we wait. And the jobs are probably not going to get any better because everybody's still digesting all this Greek stuff. Nothing really has changed. So unfortunately, we're going to have more of this. We're going to grind around. We're going to grind down until the market has a reason to be happy. Although, there's some individual names and there's some interesting stuff going on. But, there's a lot of stuff that I think you can pick up for pretty good prices. So if you were a long-term type buyer, possibly, but that's what I say. The VIX, what did it do today? The VIX actually was up slightly on the day at one point, and it closed down a half a point or so. I mean, but it was down like $1.50 from its highs. So there was a little worry, but there's really no new reason to be worried. So now we're looking for the new reason. So I think, jobs run out of jobs, waiting for Europe. And I think we're going to stay here, somewhere around, the mid-20 handle in the VIX until there's a reason to not. I mean, it's pretty consistently making in higher lows as we've sort of ratcheted up here to the grease thing. So it's the giant market binomial event, I will call it.
Yes, everyone's waiting for those tasty gyros to decide whether they're cooked or not cooked. We talked about those so many times.
Raw.
Yes. I prefer a little bit of yogurt sauce on top. I think that's what the height of the debate is going on over there right now, is exactly how much tzatziki sauce to put on that, and maybe whether or not to serve it with a tasty side of Saganaki. So, yes, Andrew, there is a lot of interesting stuff to ponder from a volatility perspective. I think you're right. We did get a lot of the quote-unquote surprises built into the market on Friday after that jobs number came out. Everything else is kind of a known unknown at this point. Of course, the Greece situation, we still are waiting and watching and worrying, and not much we can really do but sit on our hands from that one. And then, of course, the jobs number coming in and just tilting everyone a little bit over the edge. All the bears coming out in force and just crushing the market across the board. Were you still on vacation when that happened, Andrew?
I did. I was actually watching it. I got to unwind a couple of things. Unwound one thing on Friday, just because I was like, oh wow, everything's crapped out, so I guess I can unwind a couple of things. But other than that, I mean, it wasn't. I watched it happen, and I have to say I'm not terribly surprised. Okay, we broke through 1300, and then we kind of touched around 1280, and now is there enough bad news to go to 1260? Probably get one scare down there before the whole Greek thing, comes to some sort of answer. I mean, as I've been following, the new fear indicator really is the TLT or the Treasuries.
You boys over at Option Pit are in love with the TLT these days.
Well, we're in love with it because it's been so accurate. When it ceases to become accurate, I will fall quickly out of in love with it, and I will kick it to the curb. Right now, with I'm just looking at these Treasury, let's see, at 151. I'm just kind of looking around here. What are these yields down to? I mean, we're getting down there.
Yes, we had not 30-year all-time lows on Friday, I believe, in both the 10-year and the 30-year, which is not something to sneeze at. All-time historic lows in both of those products. It certainly is enough to make even a diehard equity guy, someone who typically ignores bonds, even one of them, to really sit up and take notice of that.
I mean, absolutely. People are loaning you've got to be realistic. I mean, during the Depression, Treasury bonds traded at negative yields. I mean, real negative yields for years and years because everybody hated stocks. Obviously, they screwed up, and that was the buying opportunity of a lifetime. We are. I don't understand why you just wouldn't put money in a bunch of savings accounts in different banks all over the place because you have some risk on principal when you buy a bond at this level. I mean, for the yield differential, for the 1% or less, whatever you're getting, it's a pretty big risk to jump into a Treasury at this level yielding, these low numbers. So it's almost better just to hold your cash.
I thought Facebook at 38 was the buying opportunity of a lifetime.
Apparently not. I mean, they did a great job of present valuing that whole thing. The company's worth $100 billion. What's the expected value, 20 years hence? And they're like, bing, and they hit it right on the head.
Zero, and so it's heading to zero.
And they hosed everybody. So,
well, Sean, I know was a yo-yo day for you guys over on the desk as well. Any interesting calls coming in? Anything caught your eye in today's action in this yo-yo market, this unched market we ended up with today?
Yeah, actually, a lot of our naked put sellers are getting a little bit less risky here. So the Googles and Apples and Pricelines of the world, instead of going on the weeklies of June or monthlies, instead of selling puts 20 or 30 points below, they're now selling them 40 to 50 points below, afraid of possibly getting a sign a little bit earlier than they may have been in the past.
Oh, so all these big movements are starting to shake them out a little bit, huh, and give them a little bit more breathing room in their degenerate premium selling.
Exactly. So they're willing to take less premium because there is much fear that they're afraid any day now. Back to the grease thing, you never know. They might end up owning too many shares of Google or Apple that it did not plan would happen. So instead of selling a 540 put, I'm starting to see them selling the 500 and 510s that expire this week.
What percentage of your day on any given day would you say is spent dealing with customers who want to sell downside puts in some way, shape, or form?
I would probably say in the last few weeks that has increased drastically, probably about 40% of the day.
So you're not getting
40% of the day I'm getting. And also I wanted to touch back on the VIX. A couple clients have been pointing out that the 25 level, if you go back to August of 2011, it broke 25. And that day, and a few weeks in that span afterwards, we jumped up to 45. Now then, that was those days when we were going up and down 400 points. I think it was for about 2 weeks straight. And then it trickled back down, and about January of this year, stayed below 25. And just this past week, we closed above 25 for the first time in quite some time. Actually, for the entire year. Today it hit a high around 27.77, and then obviously it did retrace back down to 26.20. But it is holding above that 25-point mark, which a lot of these naked put sellers are looking at from the ones I've been speaking with. So they're under the belief that if we can hold above 25, 30 may not be too far around the corner, and then 35 afterwards.
Are you seeing people coming in and loading up on upside in VIX, or are they just tentatively looking at the down, kind of keeping their powder dry and waiting a bit?
A lot out of the money calls on the VIX. I'm seeing some Octobers, some Novembers, $30, $35 calls, and stuff people weren't even talking about a month ago.
Interesting. So you're seeing people flock into that good old VIX upside. We talk about that a lot on the show as VIX being an indicator and whether people are flocking into that upside. Sounds like you're seeing that quite a bit, which could, of course, be an indicator that we are set for rockier roads ahead than perhaps 0.0% unchanged on the day.
Exactly.
I just like saying that over and over again because it is so
you don't get to say that too often.
Yes, exactly. Now, are these folks coming in? Are these the more nuanced guys who would typically maybe spread that off and buy upside verticals or ratios, or are these people just coming out and just naked buying upside?
No, this is just naked short selling. A lot of the same more valuable clients doing the same thing, but like I said, they are not taking as much risk as they are. They're taking less premium because of the fear of getting assigned too early.
No, I mean, in the VIX stuff, are they loading up just naked buying upside in VIX, or are they doing spreads, or what kind of stuff are they doing?
It's mostly just naked going long. Just probably most of them are just protecting their large portfolios. I mean, I'm seeing a couple guys buying every day, just a couple contracts here and there, spreading them out month by month.
It's interesting. We've talked a lot on this show in the past about S&P downside as a protection. S&P puts the more direct, quote-unquote, hedge versus a little more indirect product like VIX upside as a hedge. And we typically come down on the side of the direct hedge, at least most of the hosts on this show have in the past, because it is more of a directly correlated type of product, whereas the VIX can sometimes move in its own vague direction, dependent on its own whims at times, and it's not exactly the most reliable instrument from a hedging point of view. But in scenarios like this, and we've seen a lot of research coming out in recent months saying that on the extreme days, the quote-unquote black swan days, that those are the times when VIX dramatically outperforms the direct downside, let's say S&P put or S&P put spread. And so it's in scenarios like this where maybe you do want to start allocating, if you're worried about a big down move ahead of or as a result of grease, then perhaps allocating some of that money you used to put directly into S&P puts or S&P put spreads, allocating some of that into VIX, either VIX verticals, VIX calendars. There's a lot of different points of view on what the best way to do it are. But allocating some of those resources towards VIX upside could give you a little extra bang for your buck in this environment. Are you starting to see a lot of your clients looking for the same thing, Andrew, starting to position for some VIX upside pops here?
Yeah, we are long. We've been basically long post grease volatility and short everything in front. That's been what we've been telling people, and it's actually, that trade has worked out real well. As far as the VIX goes, yeah, the VIX expires after the Greek election on the 20th. So that's a big difference as far as like a contract. Holding on to that VIX, that June future could get super dicey really fast. So yes, we are, but we try to tell people, buy VIX call spreads. Don't buy the 35 level calls in the VIX. Buy the 26s, sell the 35s. If you want to make some explosive money, do that, because at least you'll have the volatility going your way, and it costs you a lot less money, and you're going to get a pretty good bang for your buck with those. If you end up buying the 35s way out there, you're paying like a triple premium for those options. So we try to tell people, be a little smarter about how you buy and hedge using the VIX. I mean, when things explode, the VIX works great, but you have to, put an explosion type position on. I try to tell people, buy from where you are to where you think it will go. Do not purchase options where you think it will end up, because you're going to be an unhappy person. So, we try, but
that's fighting an uphill battle, sir.
Well, it's like, it's funny is people are okay with that with puts, right? Just like my colleague here was saying, they're like, well, I'm not selling the 540s anymore in Apple. I'm going to sell the 500s, right? They're selling the options where they don't, down below where they think it can go. They got to think the same on the upside. It's not, we're not doing anything different. They're selling it to a place where, okay, so if Apple really craps out no matter what, these are still going to go out worthless. But they're still looking at, that's how I think anyway, you trade long and short options, but that's just me.
Well, there were a few other interesting stories happening over the past week while both of us were on vacation. Of course, the Facebook story has been covered to death on a lot of other shows. I believe Tim and Mike discussed it on the most recent show. If you want to learn more about some of the opening paper we saw out there in Facebook, and we had an interesting survey that we ran with the street and with our buddies over there at Trade Alert, and we had some interesting data on what people were expecting for the opening vol print. I think, Andrew, I believe it was last week when I was recording down in Florida, I think you and I both kind of guessed in the 60 to 70 range for the opening front month implied vol. Most of the readers actually came in much more on the downside from a vol perspective in the 30 to 40% range, which was surprising to me. I thought they would be off the charts from a vol guessing perspective. Turns out you and I were pretty much on the mark there. Came in at about 66% or so for the opening front month vol levels. So interesting stuff going on. We have a whole write-up of that over there on theoptionsinsider.com. If you want to check that out, just surf on over to the page, type Facebook into the search bar. You'll find that and a whole bunch of other interesting topics going on, but a lot of interesting flow. And of course, the continued downside movement in Facebook has only just driven that flow to astronomical levels. The other big story from an options perspective, a little more inside baseball story, was another one that we kind of scooped at the Options Insider last week. A lot of fun stuff going on while I'm on vacation, apparently. But then we had some hot tips coming in over the past week that Peak Six, the parent company of Options House and the trading firm, and they also used to run ONN before that crashed and burned. But they were leaning towards acquiring Penson. Of course, Penson's a big clearing firm for a lot of the firms in the options space, and Peak Six was already the majority shareholder of that, and now it looks like they've acquired the rest and created this new entity. I believe it's going by the name Apex Clearing Corp. So an interesting development there, that a trading firm and the owner of a brokerage firm now taking over one of the larger clearing firms in the business. I have to imagine some of the other firms out there who may be potential competitors of, let's say, an options house, something along those lines, or of a Peak Six, may not exactly find that arrangement to their liking. But an interesting development nonetheless. Penson, of course, has been kind of circling the bowl for a while now, so they needed a white knight to come in, and apparently Peak Six was that white knight. It's a bit of an inside baseball story. Any of you guys been following that one before we dive into the old odd block?
Just watching Penson stock go to $1, I was wondering when something was going to happen with that. It makes good sense for Peak Six to acquire the customers, though, million customer accounts and all that. So they all seem to get vertically integrated somehow, some way.
Yes, and that is the MO for the whole business these days. Vertical integration Of course, it's bad for folks like me who make their livings on sponsorship, because that means one more sponsor goes the way of the dodo. But c'est la vie. Not that we're getting big bucks from Penson, really, anyway. Not too many clearing firms sponsoring the sites these days. Sean, were you watching this story at all? Obviously, it's interesting for you guys to see essentially a competitor gobble up a clearing firm.
Yeah, it was kind of an interesting story, and even more over the last few months, having friends at other firms who actually have been clearing through Penson, just explaining how the troubles they've been having with them. So going back to your White Knight story, I think it's pretty much they had to fold in and get gobbled up by somebody. And I guess Peak 6 makes sense, having a market maker presence, a broker-dealer, and now a clearing firm. And going back to the price of the stock, you look at that one-year chart, it's not too pretty.
We've been hearing a lot from the tinfoil hat crowd on this deal as well, and a lot of them are speculating that, of course, Peak 6 owns Options House. They are a retail options brokerage firm. Zecco and Trade King famously announced a merger last week, 2 weeks ago, and they both clear Penson. They are in the middle of a FINRA filing period where they're kind of stuck for 90 days, can't really do much. And some of the tinfoil hat crowd are postulating that perhaps Peak 6 stepped up its game to acquire the rest of Penson, specifically to try to foil that merger in some way, shape, or form. So interesting speculation going on there, kind of like the speculation we saw coming in after the TVIX debacle, that it was being maliciously done to crush Credit Suisse on that one. So interesting stuff. Or Barclays, I forgot which one of those two was running the TVIX, but interesting stuff that maybe one of your competitors, Sean, is working to undermine two of your other competitors in the ever escalating retail options brokerage wars.
There is a never-ending merger seem to be going on in this industry.
Exactly. Well, of course, you guys getting picked up by Schwab really put the heat on everybody else, so they're looking to do whatever they can to match the combined firepower you guys are bringing to the table, and apparently this is what Peak 6 opted to do. An interesting choice. And I think with that, we're going to close out this Inside Baseball edition of the Trading Block and move right into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky little tune means it's time once again for the Odd Block, the portion of the show where we discuss the interesting and or the unusual and sometimes the downright head-scratching activity we're seeing in the old options market. Today, we're going to kick things off, speaking of dogs, with RIMM, Research in Motion, ticker symbol, of course, RIMM. This name's been under pressure for a while, and they saw some significant pressure again today, down about 6%. They broke that all too important 10 handle this afternoon, closing today at $9.66. This is essentially their lowest level in 10 years, so not exactly a bullish day for RIMM. I know all our Canadian listeners are weeping openly at the notion that RIMM finally broke the 10 handle. Of course, they've been I don't say circling the bull, that sounds pretty pessimistic, but let's say having some interesting times of late. Of course, the BlackBerry playbook not exactly faring too well. Most of their phones really losing a lot of market share. But yes, a lot of interesting things going on. Of course, they just had their BlackBerry World Conference a few weeks ago where they announced essentially a series of touchscreen phones, which of course a lot of the BlackBerry faithful said, what are you doing? We're still with BlackBerry because we like your keyboards. You're one of the few people who actually makes physical keyboards still in this day and age, and it seems like they're abandoning that as well. So a lot of people are kind of scratching their heads as what the heck is actually going on with RIMM, and certainly the market following suit. And not surprisingly, we saw some people snatching up some bearish positions here in RIMM. Of course, overall in the day, it was a pretty strong day from a volume perspective. RIMM's been putting up some numbers lately, 85,000 contracts a day averaging of late, which is pretty strong for them. They put up over 90,000 today, so serious numbers going on here in RIMM. And we saw a lot of people flocking into the near-term downside, thinking that RIM's really going to bottom out here over the next week or even the next few days. We saw someone coming in, scooping up about 1,250 of the weekly June 10 puts. So these are already in the money. When he started buying these, I'm sure they were still out of the money earlier in the session. He picked them up for about 23 cents. These are already trading about 46 at 47. So this guy is doing all right since he picked them up so early in the day. Already doubled his money on this trade. He also saw people coming in, dumping a lot of upside here, or what is upside today, was pretty much at the money a little earlier in the session. People dumping these weekly 10s, the 10 calls, about 6,200 of them, a total of about nearly 13,000 June 10 weekly calls trading today. And we also saw a lot of upside call sellers, particularly on the 10 handle strike. We saw people flocking into front month in June, where they sold about 2,000 of the June 10s for about 28 cents earlier in the session. And then we saw a bunch of people also selling the June 10 weeklies. About 13,000 of those went up on the day at a variety of prices. So not surprising, a lot of people looking that like the near term is not exactly going to be too bullish for RIM. Andrew, I take it by your comments that you're not exactly a long-term fan of RIM.
No, I used to have a BlackBerry. I was okay.
I think everyone did back in the day.
Text it okay, yeah. But it's just the I just use an iPhone, but it's just it's a much better product. There's nothing you can say. It just kind of reminds me like of Wang. Wang was a giant company with giant stock market capitalization, and then they never changed, they never evolved, and gone. So I mean, RIM is basically gonna they're on their way to doing the same thing. I mean, they have a lot of customers, but Apple and Android are gonna eat their lunch. There's no way around it.
Yeah, especially if they're just kind of making Me Too touchscreen phones that everyone else is making. They're several generations behind on that. I don't see where their value added really is on that. BlackBerry had security, they had enterprise, they had BlackBerry Messenger a lot, and a keyboard, and those were their big advantages, and they seem to be abandoning one, if not many of those in this modern environment. Yeah, so I think our Canadian listeners shall be sad for some time to come. Sean, were you putting up a lot of RIM orders today?
Well, actually, personally, I was a BlackBerry user up until this past Thursday.
Oh, so you're the reason it broke the 10 handle. When you finally cashed yours in.
I was a long-time BlackBerry user, and it finally stopped working. I was a big fan of it, mainly because of the keyboard, but stopped working. So this past Thursday, I was forced to join the touch phone world, and did join the Droid world. Got the Samsung Galaxy for the first 2 days. I was missing my BlackBerry, but then I realized why. In 2 years, RIM has gone from 40% of the market share to now only having been 6%. And the Droid and the iPhone are just way better products. And I really don't know how much more RIM can do. I mean, they do have that new Bold out, which is half touch, with the keyboard flipping off the bottom. But from the phone that I got, the Samsung Galaxy, in 2 days just playing around with it, I'm amazed how much of a better product it is.
Yeah, that Galaxy Nexus, is that the one you got?
Correct.
That's a great phone. Not much not much in the BlackBerry world that can really match that one. If you're looking at the flagship Android phones or at the iPhone, obviously they're still light years behind. And of course, if you want a physical keyboard, they of course some of the Droid phones have those now as well, so that you can go get that on other makers as well. So really, I think dire times here for RIM. And of course, Sean, it was really that. It was that you're cashing in that handset that really broke the 10 handle here for BlackBerry. They said, wait a minute, if we've lost Sean, then we've lost them all. And I think that's really what it was that really pushed them over the edge today, make them down about 6%. So you have yourself to blame for that, sir.
I was the $10 support level, and that was it. Once I went in,
yep.
We broke 10.
That one handset was all that was doing it. Well, moving on to other sectors away from the handset land and into the land of gasoline and jet fuel. We're talking about HFC. This is HollyFrontier Corp today. They popped up on our scanners after a bunch of activity, an explosion, if you will, of activity This, of course, was following in the footsteps of HFC being upgraded from to buy from neutral at UBS. Of course, longtime listeners of this show know how much esteem we hold analysts in here, so we won't get into that today. But needless to say, that drove some options activity in the stock, but not perhaps what you might have expected. We didn't see a flurry of call buyers or put sellers or anything along those lines. What we actually saw was a pretty sizable strangle seller. Someone coming in on a name that on a typical day does about 4,500 contracts. Someone came in and dumped 15,000 contracts, roughly 15,000 contracts, about 7,600 of the July 29 half, 30 half strangles, and he sold them, I said, 7,600 times for about $3.60 for about $3.60. And of course, HFC closed today down about 4% on the day to 28.57. So it seems like that early morning bump they got from the analyst upgrade really didn't hold much water towards the end of the day. It traded up it was trading over 30 half, I believe, at one point today, and it's closed at 28 half. So not exactly boding well right now for this strangle seller, but we'll keep an eye on this. This is a pretty sizable trade and a very specific one to pick out such a tight range. Usually we don't see strangle sellers coming in unless they have a real handle on this name to really come in and pick such a tight range on the strangle. So a lot of potential ideas as to who could be behind this very, very tight strangle sale here. Andrew, you watching the activity here in HFC at all?
No, I'm just pull it up. I'm just looking at it. Looks like they have a pretty big dividend stream in this thing. I haven't seen it. It hasn't done much this year. It's probably stayed right around this range. So I don't think that's an awful strangle sale. Almost looks like it's a REIT. I don't think it is, but it pays a huge dividend, 50 cents a quarter now.
A REIT's blowing out a ton of strangles in a jet fuel maker, you think?
Yeah, that's a very interesting. That would be an interesting game,
odd
just
play for them.
Point of view. Yeah, it's like one of those. I hate to say it, but like, do you buy right this stock or something like that? I don't know.
Yeah,
it kind of.
This one definitely caught my eye as well for a couple of reasons. Not the fact, A, that the strangle is very tight, B, that where they picked it, and just given the overall level of activity we typically see in this name, this really just stands out as, who could be behind this. Sean, have you had a chance to look at HFC at all today, or is this a new one for you?
It's a new one. I mean, not a new one for me, but really didn't get too many calls on that today. Possibly a couple trades.
So you didn't put up this 15,000 lots of contracts in this strangle? That wasn't you today, Sean?
I was only 10,000 out of the 15, so I can't take credit for all of it. But we only got a few, but actually what I'll touch base on, not really the jet fuel, but when we get to the trade block, got some info on crude oil, especially referencing July crude oil.
All right, then. We better get there pretty quickly then, because we've been gassing on here for a while. So an interesting one to keep an eye on here, HFC. We'll keep an eye on it going further. You're right. But yeah, there's dividend coming out on the 8th. It is pretty substantial. You're correct, but I don't see really why this strangle seller, why that would play into their calculations, at least particularly if they're a REIT. But we'll keep an eye on this one.
It feels like a long holder of stock. Somebody just owns a lot of the common, and they're like, we'll take the $3.50 extra because the vol's jacked. I don't know. That's what
he's about to
like.
own a lot more if he's an older holder of the common here. So he's a fan of doubling down apparently I
guess so. I mean, it's got HFC. A huge cash flow for a company. I mean, I'm not the fundamental guy, but it ain't no Facebook cash flow here. They've generated $6, $7, $8 the last year, and the stock's trading $28. I mean, is there something wrong? I don't know.
Well, speaking of things that are wrong, we're going to close out the old odd block with an odd block special, which is Hansen Medical. I believe we discussed them on the show before. Another one of our sub $10 biomedical specials. This is a medical equipment maker. They're trading $2.50. So gapping up today, they were up nearly 12% at one point today, and they're closed up about 15 cents or 6.5% on the day to $2.46. And what we saw is people picking up in the money calls, quote unquote, in the money for such a small name here on the June 2 halves. We saw about 1,800 of them total going up on the day today, bulk of them being purchased for about 28 cents. So yeah, a lot of call buyers here in Hansen. Also some activity appears on the put side. People trading nearly 1,000 of these 2.5 puts. Looks like, just really quick here, parsing it, looks like they could have been legging into straddle or even perhaps a combo. There was some heavy sales of these puts as well. So our analyst didn't write up the put side of that, so we'll have to take a look at that for ourselves, perhaps on another show. But just wanted to mention it before we close out the old odd block today. Shares of Hansen Medical, options on Hansen Medical getting a strong uptick today. After all, this is the name that usually does 100 contracts a day. They did 3,000 today. So some sizable volume for good old HNSN. With that, we're going to close out our odd block segment and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Sean, hopefully Tim and John and the boys prepped you for what is in store for you here in your inaugural Xpress Block segment. So with that, I will toss the reins over to you, sir, and let you run with them for our listeners and let us know what is going on, what caught your eye over in the land of OX today.
Well, two different technicals. We're going to talk about the July crude oil technicals as well as the SPX. And then I'm going to end with somewhat of a economic report coming out Wednesday that a lot of traders don't pay attention to, but I think they should. First off, we're going to go back to crude oil. Back on May 1st, we were about $105 a barrel. And just in about a month, we are nearing 80. So what I'm hearing is there are quite a few stop orders set at $80. Now, we were down a little bit early today, and we ended up closing up right around 84.08 to 85 cents. However, after speaking with one of my future specialists, what they were telling me is if we do break through that 80, there is another technical support at 74.95, which was last touched on in October 4th of 2011. If we hit that, we could see some more serious selling down to the 65 and maybe even 60 level. Now again, this future specialist manager of mine, he did state if we did stay up today and continue to go up, this could be the beginning of a retracement. However, if we do keep going down and those stop orders are hit at 80 and we come close to that 74.95 level, there's no telling how far we'll go.
So triggering that slew of selling once we start hitting those stop orders, huh?
Yeah, there's quite a few stop orders from what I'm hearing at 80, and if we hit that 74.95 level, there's going to be some more serious selling. So, again, we did go higher today, so, I mean, it's only one day. But if we get a couple more days of higher, we could be retracing back to 90. But main eye to keep an eye on is that $80, because then there's quite a few stop orders. We hit that, and we hit 74.95 after that. Watch out for the bottom. Where that bottom is, I don't think too many people know. They're really watching 80, and then from 80 to 74.95. And that's where I'm going to leave it with crude oil.
All right, thank you for that. And what else was catching your eye over there at OX today, Sean?
Well, actually, not only today, but going back to last Friday, when we went through the 200-day moving average on the SPX, 1284, and blew through it all the way down to 1278. Again, today, like you said, it's pretty funny to say we only went 0.0 today. However, what we're looking at right now is the next level, which is going to be about 1258. We hit 1258. Many of these hedge fund traders and institutional traders are calling 1245 and possibly even bottoming out around 1200. But again, before all that happens, we're going to have to go through 1258. But if we have another day like this past Friday, it wouldn't be too hard to do that.
Of course, if we see these sell orders and if you see all these stop orders start getting triggered in crude, that could mitigate some of that sell-off we're going to see in the SPX. You know, crude is probably the one bright spot we're seeing in the market right now, the one little positive ray of hope with everyone clinging to grease and all these other and jobs and all these other dire facts. The fact that crude oil sold off a bit is probably the one ray of hope people have to cling to.
That's true. And lastly, there is the old Fed Beige book coming out this Wednesday. Comes out about 8 times a year, and it's advance of the FOMC meeting on the 20th. With last jobs number on Friday not coming in so hot and the market's selling off 270 points, I think a lot of traders are going to be paying attention to the key words on the economic conditions that come out during that Fed Beige book that may lay a little bit of groundwork of what's to come ahead in that FOMC meeting on the 20th. I think reports like this are what some retail traders really need to start paying attention to, because they may stop looking at their computer around noon and not realizing that a report like the Fed Beige book can quickly turn the market up or down in a matter of seconds, hours later, after they feel they were done trading for the day.
Yeah, you know, the Fed has really fallen off most people's radar these days because they've been so powerless for so long now. I think most people have started to tune out, you're right, all the Beige book results and everything else like that. But perhaps it is time to start reconsidering those when you're looking at your screens throughout the day. All right, thank you for that, Sean, and not a bad start for your inaugural Xpress Block segment. But now we're going to close that out because we are indeed running long and dive into an abbreviated Around the Block segment.
Around the Block.
All right, and welcome to the Around the Block. This is, of course, a portion of the show where we discuss what's coming up on our collective horizons for the next few sessions. And Andrew, I will start with you. I have a feeling that you're going to say grease, grease, and more grease with perhaps a side of Saganaki.
Yes, flaming cheese all the way, no question. We'll probably have one more ugly day. But we're going to get a lot of this treading. I think, you fade every rally until then. And we'll actually see what would be best if we just get some sort of resolution. Either they bail or they take the austerity, they bite the bullet, and they move forward. I mean, they got to do one or the other, and the Europeans aren't doing themselves any favors until they do that. But that's where the equity markets has to be able to see, to move, and that's what I'm waiting for. So no change as far as trade structure goes. Still kind of got those long time spreads and stuff like that, where we're sort of selling the pre-election and buying the post-election.
And taking all that gamma love along with it.
Yes. I actually won't. I think buying a strangle in July, as crazy as it sounds, and selling this June in front of it is really kind of the best type of play.
Well,
that's just me.
You listeners, you heard it from the lobster himself. You need to decide if that is the play for you, because there are some inherent difficulties in managing that type of position, particularly if you're not on the savvier end of the spectrum. Then you call up a guy like Andrew, let him manage it for you, and then all of your worries.
Or we teach you how to manage it, or at least get into it where you don't have as big of worries as you could.
There you go. And Sean, what are you watching around the block for the next few sessions? Obviously, you mentioned the Beige book and a few others. What else are you keeping an eye on? What are you looking at here in the broad markets?
Well, as we're waiting for these Greek elections in the next 3 weeks, I think you got to keep your eye on these SPX technicals more than anything. If you're still involved in Facebook, it did actually hit a new low again today. I don't know if anybody realized that. It did touch, I think, 26.44 and then bounced. That was the new low from since the first day of trading.
Yeah, this puppy's looking just stronger every day at Facebook.
It sure is. So hit that new low of 26.44, bounced back. But I can't tell you, regarding Facebook, the number of the interest has been lacking, and the individuals getting in at the beginning, first week, are now no longer thinking this is a long-term hold, and I'm seeing a lot of people getting out and folding the table and feeling that if this is a lot of people have the mindset of buying this stock and saying don't even look at it for a couple of years, but they look at it in a couple of years, it could be another $4 or $5 stock.
Really? So they're starting to cut and run there over at OX, huh? They're deciding just to take their 10, 15, almost 20 handle losers at this point and just save them for the tax man, I suppose.
getting a lot of thank you cards for the individuals that were not able to get in at the IPO of 38.
That's fantastic. Thank you, Sean, for keeping me out of that debacle that was Facebook. I feel sorry for whoever got that 45 print, because that is just the scarlet letter of the markets these days. That is shame upon shame right there. All right.
Well, he should print the Wall Street Journal, because he is the top print. So whoever that individual was,
whoever that sucker was, the genius was the guy who came out and just dumped every single Web 2.0 stock in one massive block trade. That guy really looks like just a genius right now. Zynga, I believe, and Facebook, and all of them sold them across the board. And looking fairly prophetic right now. And speaking of which, that is going to do it for this abbreviated Around the Block episode, and also for this episode of the Option Block. But before we go, I want to thank my partners in crime for joining me on the show, starting off with the Rock Lobster from Maine himself, Mr. Giovinazzi. What is coming up in the land of OptionPit.com?
The landofoptionpit.com, we have our big event, June 14th. I'll be in Chicago with our clients. We will have a day of trading and a day of baseball. It's a 2-day event. And, yeah, it should be great. We also have in the month of July, we will be doing a seminar for options profits as well. Mark will be giving one on using volatility, helping to decide what deltas to trade. So, every month we keep rolling along. And we'll have some more announcements coming up. Like I said, the top secret announcements are getting closer. So all very interesting stuff.
All right. Thank you for that, Mr. Maine Lobster. Now go back about your business of catching those delicious, succulent Maine lobsters, sir.
Thank you. I will, and I'll see what jumps on my plate here tomorrow. All right, guys. See you later.
And Sean, we want to thank you too, and not a bad effort, sir, for your inaugural outing here on the old Option Block. I know it can be sometimes a daunting prospect to jump into the OX hot seat.
As long as I got a C- from you, I'm happy with it.
No, it went fairly well, Sean. So before you go, what is coming up over in the land of Options Express that may interest and or intrigue our listening audience?
Well, I think some of the audience should, if they haven't opened an account yet, they always open an account at optionsexpress.com for free. Check out our education center. We have quite a few live webinars and actually live events. You can check and see if we're ever going to be in your area. Our education team do travel around the states from time to time. And if you ever any of those times meet your schedule, highly recommend you check those out. If you can't, we do have 2 or 3 weekly live webinars that you can watch online and learn about all the different things Options Express has to offer you.
And if you are indeed one of those longtime listeners who's been listening to us drone on for well over 100 episodes now, and you've yet to open up an OX account to see what all of the fun stuff they have in store for you, or to see all the fun stuff, I should say, that they have in store for you over at Options Express, then by all means surf on over to not just optionsexpress.com, but optionsexpress.com/OX radio. That is indeed our landing page for this show, so that they know you're coming to them from the Option Block, so they can give us a nice hearty thank you and a pat on the back for all of the people that we're sending their way. So by all means, if you are interested in checking out what they have to offer at OX, and by all means, check out that link, optionsexpress.com/OX radio. And if you're interested in learning any more about any of the topics we discussed on the show today, including the unusual activity, some of the breaking news, or any of the developments from the world of options, then by all means, surf on over to theoptionsinsider.com. You can find a lot more about all those topics we just discussed, as well as breaking news from the options market, and of course, all of your favorite programs from the Options Insider Radio Network. And before we go, all of us here on the old All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.